Greetings again from Sprott Money, SprottMoney.com. It is time for your December Ask the Expert segment. We're ready to start wrapping up the year, that's for sure. I'm your host, Craig Hemke. Joining us to discuss things here in December of 2024 is my good friend Tavi Costa of Crescat Capital in Denver. Tavi, thank you for carving out some time. I've got some stuff I want to make sure I visit with you this month.
Craig, it's my pleasure to be here talking to you, so thanks for having me.
Hey, before we get started, a couple of things. One, again, this is all brought to you by Sprott Money, SprottMoney.com. Still time to do some holiday shopping. We're recording this here on the 13th? Taylor Swift's birthday, by the way. My daughters would remind me of that. 12 days to Christmas. So there's still time to go to SprottMoney.com, check the holiday gift guide, give the gift of sound money and even education this Christmas. Again, SprottMoney.com, buy some silver, some gold, give it to your kids, your grandkids, your friends. If you buy more than $500 worth, shipping is free and comes with insurance as well. SprottMoney.com or give them a call at 888-861-0775. Tavi, before we get started, tell everybody a little bit about what you do as a partner at Crescat, how they can follow you on Twitter, and what Crescat Capital is.
See, I'm always learning with you. Happy birthday, Taylor. I'm with Crescat Capital. You can find my work on Twitter. I share a lot of macro views there as well. I advise macro ideas at Crescat in a big way, and all the ideas that in terms of identifying trends and large trends that we tend to express those views in the markets. One of them has been obviously precious metals and the metals and mining industry, of which we have a lot of investments in this part of the market. So you can find my work at Tavi Costa on Twitter, and also Crescat.net is where we share our letters.
Great follow on Twitter X for sure, and you always put out some really mind-opening charts, reminders about what some of the fundamentals are, particularly in the mining sector. But you also are a very good macro strategist, macro analyst. And that's what I wanted to start with today, because as we wrap up this year and head into next year, we're down. The dollar's up probably 6 or 7% year to date, as measured by the dollar index, which obviously just measures the dollar versus all this other basket of fiat. So you never know if the dollar's getting stronger or if those other fiat like the euro getting weaker. But nonetheless, even with higher rates and a higher dollar, obviously gold's had a great year. There's this thought out there that ever since the election of Trump that the dollar is going to continue to be strong, and it's led to some of the weakness in gold over the last month. I think you've got some ideas as to where you think the dollar's headed, so I'll just kind of let you take it from there as to what do you think 2025 has in store for us?
Yeah, I think that the dollar trade would probably be the most important investment idea of 2025. It's my biggest focus right now. I remember being focused on inflation and right after the COVID recession and the stimulus that we saw during that time coming out of that. And then looking at the issuances of treasuries and seeing how that could cause interest rates to start rising. And I think that the next chapter of this book, it would be the dollar. And the dollar to me looks extremely peaky and overvalued and overbought and overpositioned. I'm extremely skeptical about that, especially not only relative to hard assets, which has been a view that I've shared for many years now, but now starting to add to that idea that other fiat currencies may actually perform better than the US dollar. A lot of people forget that there are periods in history that the US dollar devalues versus other fiat currencies, and I think we're in the process, or at least getting close to or approaching the apex in terms of the dollar versus other fiat currencies. And I think that that's exactly what unleashes a lot of different macro trends. Like the gold trend is leading the way, but emerging markets could do very well in the front of that. You can see the rest of the world in terms of equity performance versus the US could do very well. We can see the mining industries or resource companies doing better. South America is a region that I'm really focused because I think it's going to be one of the places in the world that may benefit tremendously from this new administration, but also the trends that we're seeing in the macro and also deglobalization trends that are important. So to me, when you step back on the DXY that you're referring to, it's harder to see those things when you just look at the overall the chart and sort of a plain way going back to the 70s. But if you take a 10-year rolling change of the DXY index, you can see very clearly, and that's one of the charts in my letter, that we go through these phases, 10-year secular shifts, that the dollar goes up and then peaks and then it goes down. And usually those upper movements are in line with the dollar milkshake theory that the Brent Johnson usually talks about. It why the inflows of capital from foreign investors and others coming into the U.S. Tends to inflate things, inflates U.S. equities, inflates treasuries, inflates all sorts of asset classes in the U.S. But then when that trend reverses and you start seeing the other side of that, you tend to see things that are mispriced and neglected for a long time to come back. Value investing tends to come back. Emerging markets tends to come back. European equities, Japanese equities, Indian equities. I mean, you can go on and on. And I think that a lot of people are extremely skeptical. And there's two things that I love about investing is when you find two boxes that you check. One, an idea that is contrarian, that is also true. And I think that's the case here. And I can make the case, and just the final thought is what we may see with the fiscal stimulus. Fiscal stimulus may actually be lower, not higher, and the Fed will be forced most likely to suppress rates. That's a combination that causes the dollar usually to devalue significantly. So I think that's the biggest trend to be aware of for 2025.
Well, that's kind of where I wanted to go next as a follow-up, in that there's certainly a contrarian component to this, where it seems that everybody's on the same side of the boat, right? Almost a mania that followed after Trump's election, that, it's so obvious, the economy is going to be strong, and so rates are going to stay high, and inflation is going to stay high, and the Fed's not going to cut. And so now you got everybody expecting one thing, and markets taught us anything over the years, Tavi. It's obvious, sometimes it does the opposite of what everybody expects. But there's probably got to be some kind of fundamental basis to that too. So what do you expect from fiscal and monetary policy here in the U.S. that would kind of help drive that weakening of the dollar in 25?
Well, it's a lot of things to think about. First of all, what is obvious is obviously wrong most times in markets, as you mentioned. And the second thing to say is, since Trump got elected, there has been this sort of spirit of American exceptionalism being in place. But this has been the last, call it, since the global financial crisis, one of the most aggressive or intense outperformance of U.S. versus the rest of the world we've seen in history. So American exceptionalism is nothing new. We've experienced this. I mean, equity prices are already at those levels. If you look at price to book, a very classic way of looking at markets, that way you can include financials, you can include technology companies, you can include everything, and you can kind of see that the U.S. markets are almost like 6 to 7 times more expensive than the rest of the world. We've never seen this before. And so to me, this is the tech bubble 2.0 and all sorts of things. And the question is this going to pop? And, historically, we tend to see those big declines in when things get really frothy. But I think most importantly is that the capital is likely to just flow out of those markets and flow into somewhere else. And it's hard to believe it's not going to go to places that are looking really cheap. And you start seeing that smart money has already started to do that. There's a reason why the Japanese equities have done so well. There's a reason why Indian markets have started to do so well. Look at South America. Argentina has been doing so well. All these things, they start to kind of move and become contagious. And so I am of the belief that we're going to see that. And in the U.S., if you pay attention to what's happening with Scott Bessen's nomination as a Treasury Secretary, which I think it's one of the most important things going on right now, and his views about the dollar, his views about the stage of the U.S., relative to the world, and how we're likely to be seeing a monetary realignment. And I'm using his words. What does that mean? Maybe gold will probably play gold was his largest position, by the way, in his hedge fund. Largest position in his hedge fund. And you have to pay attention to that, because that's going to be part of the plan. And so, to me, I'm really looking forward to what this will look like, because if you listen to him closely, he mentions Trump cares about two things. He cares about dollar being the reserve currency, but also, or remaining its reserve currency status, but also the second thing, which is a weaker dollar, is kind of almost fundamental to create growth in the U.S. versus the rest of the world. And so if they're going to push those two things, which he mentions, those two things are not mutually exclusive. In other words, they will probably do both. And so I am of the view that they want to, the same people that said we're never going to see inflation again. You can print money just like we saw after '08, and it doesn't create inflation. And then comes in COVID, they print more money and do more fiscal stimulus. And guess what happens? Inflation reignites. I think the same people that said that are the same ones that are now talking about the Trump and his administration are not likely and are not capable of forcing the dollar to devalue versus other currencies. And I think we're in the process of seeing some sort of, call it the Plaza Accord of today. And I think this is going to be quite significant.
That would certainly, again, not stuff that people are thinking ahead of here as 2024 wraps up, but you certainly make a good case that that's going to be an issue in 25. In our back half of this, Tavi, I'd be remiss if I didn't pick your brain a little bit about the mining sector, the natural resource sector, and the mining shares, just because that's one of the specialties of Crescat. It's so odd. We've had, for us physical metal stackers, you see the price rallying as the dollar devalues against gold essentially this year. The mining shares on balance, though, have not been able to keep up, certainly not providing the leverage that people talk about as they should. As the new year begins, what do you expect next year? And would be some, I guess, some words of wisdom as to what we've seen here in 2024 versus next.
I think the best analogy I have is think about you're in an ocean surfing, and you've seen the first wave coming, which is gold. The second wave is forming, which is silver, and the other metals have started to move as well, like copper, and even PGMs and others have started to move as well. Zinc, which they're all linked, right? And you have this other wave forming, which hasn't even started yet, which is the emerging markets wave that are linked as well with the metals and mining industry. And right on the way back, you still have the big wave, which is the speculative wave that comes in later. It's almost like a tsunami that really unravels the whole industry and makes a huge secular movement. And this is where you create the biggest the wealth of this usual movement in the mining space. And so, to me, this is all coming. It's very. I don't know a time in history where the first wave comes in, which is gold, and the others don't follow. So to me, this is all kind of in that direction, and I believe strongly that we're starting to see some fits and starts of that. The M&A cycle has been triggered. We're seeing acquisitions already started to occur. Most of these acquisitions are starting to increase in prices. I am in the process of trying to buy mines privately, and it is very interesting that the competition has picked up quite significantly, which means you're starting to pay more for those assets, which also means that eventually people start paying more for multiples for the public assets as well. And so this is all linked. I really don't want to be overly pessimistic about the industry because we haven't seen yet the big movements, especially in the smaller parts of this space. And so I'm extremely optimistic. I think we're seeing all the right signs that point to the right direction. And it's a matter of time until the seniors, which have been having, I guess, great last 12 months. But think about this from a extrapolation of what does that do to the overall space, which is, usually that currency, that is their share price, becomes very useful for other acquisitions that then drives valuations higher of smaller cap names, that then drives the whole cycle much higher. So you're starting to see as well the general investors beginning to be more interested in learning about this companies and the business overall. And I think that this is just the beginning. And I would be shocked if the mining industry overall also is not also being seen as a critical industry by the Trump administration, given the fact that we're seeing, not only electricity consumption surge because of AI and onshoring and all sorts of things, but also the risk that we have as an economy. This poses a major risk for the U.S. economy. The fact that mining used to be 20% of GDP and it's now 0.3%. And the reason for that is because we are major net importers of ore and metals. In other words, we don't have the capacity to refine and smelters, and I think that that's going to be a big part of this as well. It's rebuilding the U.S. economy to make the mining industry great again. And so I am very focused in this industry because I do think things are going to be changing quite significantly here.
So ultimately, Tavi, the sector is so overlooked, and so tiny, as you said. I saw a thing earlier this week. I think it was back on Wednesday. The big 8 used to be the Magnificent 7, but I think now they include Broadcom in that. That day alone increased their market cap, those 8 stocks alone, by $450 billion. The total market cap of the GDX is $14 billion, right? So, there's so much cash out there. If even just a tiny sliver started going into our sector, there's just, it's classic inflation, right? Too many dollars chasing too few of goods. There's just too few of opportunities. But it hasn't happened yet. So my question, long question, right? What do we need to get that to happen? Is it just continued more stimulus, a weaker dollar, or higher gold price? Is it as simple as it's a value versus growth proposition? We got to get growth out of favor and get people looking more for value and dividends. What will eventually drive that, let's call it generalist interest, and some of that flow of funds into our sector?
I think it's a continuation of this trend on the gold price driven by central banks is the biggest, because it drives metal prices higher. When gold rises, you tend to see those other waves I was referring to beginning to also, I'm referring to other metals beginning to follow along, which we're starting to see that certainly. But, to answer your question, I do think it's a rolling over of the dollar. And I think we're getting so close to that. If you look at that chart that I was referring to, we're already bending, right, in that trend. In other words, the relative performance of U.S. Equities have still not reflect this rolling over of the dollar. And again, this is, we keep looking at the industry as having potentially its own unique issue. But when you think about Brazil, for instance, if you look at the GDP trends and other emerging markets as well, the trend is improving in terms of their economy. Think about that as being the gold price, right? Those things have been improving, but the share price of those companies have not improved whatsoever. What does that sound familiar with the mining industry? It's the same thing, because they're all the same trend, essentially. They may take 6 months or a year to sort of work together, but ultimately, when you get one going for the next 10 years, you should be focusing on all these trends, because they're all probably going to be in the same boat. So I think it's not unique to the mining space. It's just a timing impact that we're starting to see when the dollar starts to move the other way. And to me, it's inevitable. The world cannot grow with a strong dollar. Let's put it that way, right? At least it could if the dollar is coming off from a low level, but it's not the case. The dollar has been moving higher for a while now. And given the fact that we have so much debt, we cannot sustain a bigger movement on the dollar anymore. If that's the case, then U.S. equities are not moving higher any longer. This is a problem. This is not a good thing. And so, in my view, it's almost like that is the pressure that we need to take out from the global economy that is inevitable through an accord, through a corporation, or through the inevitability of the dollar actually weakening because of fundamentals, because of the fact that the U.S. is with so much debt, and the interest payment on the debt so large now that it has to be suppressed relative to other countries. And that impacts the dollar, impacts everything else. So sorry to go back to that, but I do think that that's related.
In the end. All right, Tavi. Tavi Costa at, what was your that X handle again? Hit me with that first.
And Tavi Costa.
Okay, so that's TaviCosta. As we wrap, tell everybody a little bit about Crescat, where they can find more information on what your firm does, but also where they can get this newsletter you mentioned.
No problem. Well, we run three funds essentially. One is a global macro, one is a long short, and then a third one that we're so excited about the mining space that we created a mining focused fund. And so you can find that on our website, crescat.net, all the information about those three vehicles, but also the letters. You can go to crescat.net as well. There's a portion there where you can find the letters, and you can read this report that I put out on the dollar. It's the history of the dollar cycles, and it sort of explains this entire view and how we're basically facing an unsustainable path that likely will drive the dollar much lower. And, I understand a lot of the viewers and listeners are probably thinking, no way that the Canadian dollar, the Australian dollar, the European currencies can outperform the dollar in the next 5 to 10 years. Well, read the history books and you will see that there are times when those currencies can outperform the dollar itself. And those are times that usually are linked to the mining space and emerging markets doing very well. So that's where I think it's so relevant for us.
Terrific. Thank you, Tavi. It's always so great to get your thoughts. I wish you a Merry Christmas and a great holiday season, and hopefully a prosperous 2025 for all of us.
You as well, Craig. Thanks for having me again.
And everyone, before you go, make sure you hit like or subscribe to whatever channel you've been watching, because guess what? We're going to have a visit from Santa Claus, let's call him, from the Great White North with his white beard and everything. Next week, Santa and I are hoping to record kind of a year-end wrap-up. You don't want to miss it, so hit the like or subscribe button so that once Santa and I get a chance to visit, you'll be reminded. I'm sure it'll be interesting, entertaining, and informative. So anyway, keep an eye on this channel for that bit of extra content that's still coming this year. We wish everybody a great holiday season. And thank you again, Tavi. We'll wrap it up. Have a great rest of your day, everybody. Thank you for watching. And we'll still have some more content for you coming later on this month.